following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Good morning, everybody. Ryan Krebs here. Very excited to be back and hosting another interview with one of our vendors. So I want to welcome Andre from Edgeful. How you doing this morning, Andre?
I'm great. Thank you for having me. How are you?
I'm doing well. Very excited to have you here. I am excited for the NinjaTrader community to see what Edgeful is and kind of show some of the benefits that they can get from checking that out. So, let's start with the basics. You want to give us a little bit of your background and where you're from, how you got into trading, all that fun stuff.
Yep. So my name is Andre. I'm the CEO of Edgeful. I am from Miami, Florida. So any local Floridians, great. My background is in finance and accounting. So I worked at a hedge fund in Boston called Weiss Asset Management, and I worked at Goldman Sachs for over 2.5 years. It was a wonderful experience working there, working at both those firms. I mean, the hedge fund is something that, MIT PhDs, they study math, study computer science, just such a great group of people to be around and to learn from. Same thing goes for Goldman, obviously. So being around those minds really helps you kind of see the world differently, especially the financial markets. And the financial markets, something that I don't know what triggered my obsession with it, but since I was in early high school, I've always been so fascinated with the markets, and that's what led me to study finance and accounting, which then led me to work at a hedge fund, which then led me to work at Goldman Sachs. And working at Goldman was an incredible experience, but it wasn't really for me. It was working from 7 a.m. to 3 a.m. every single day. So as you can imagine, it's pretty grueling.
Busy day, yeah.
Yeah, pretty busy day, pretty grueling. And I was just thinking about, I don't want to do this anymore. I want to find something that I want to do for myself. What do I love to do? I love the financial markets. Yeah. And so I left Goldman and I started to personally trade. And when I started to personally trade, I was looking for these strategies. I was looking for these concepts, how do I know my daily bias? That was one of the number one thing is, how do I know my daily bias? Do I want the market to go up? Am I expecting the market to go up? Am I expecting it to come down? I had no idea how to determine that every day. And one of the things as I did more research was this gap fill concept. And that gap fill concept tells you if price opens today above previous close, you want to have a short bias targeting this area. Gap fill is very, very simple. It's one of my personal favorites. I can go into actually the founding story of what actually caused me to build Edgeful, and it was the gap fill.
Okay.
Because as I did research on this, you go on Twitter, on X, you go on YouTube, you go on Instagram, you can see everyone says, oh yeah, the gap's always filled. That's obviously not the case. And I have a very analytical background. Obviously, I'm very comfortable with Excel. I have certifications. I'm very, very comfortable with data. So I buy a bunch of, and at the time I was trading options. So I buy a bunch of data on Tesla and on SPY. And put it into Excel. Now I go through personally and I figure out all the gaps up, all the gaps down. And now I can see, okay, this is the percentage of them that fill. So if I know that 70% of the time X is going to happen, I can have a bias in this direction with this target. And now I'm like, perfect. This is really helping my trading. I'm getting really good insights from it. Now I start to add more and more into this Excel file. And for those of you who have experience with Excel, you know that it can get really messy really quick. And I start to add more and more reports, like gap fill, opening range breakout, all these different things, until my Excel becomes this monster. And I'm like, you know what? it's taking way too much time to do this. Coming from someone that has certifications, this is like a red flag. There's got to be something out there that already does this for me. Tells me what weekdays make the high and low of the week most often, etc. Go online. I've signed up for every single analysis software, and there's really nothing that does this, which is pretty shocking. I've gotten on the phone with over 2,000 users, and they tell us, nobody has been able to tell me that they've seen a product like Edgeful. And so because I couldn't find anything, I was like, you know what? I think that we should build it. I think I should go and build something super intuitive. So very, very simple. Bring that barrier of entry down for a trader to actually be able to trade with data on their side versus their emotions, and keep it very clean, like if you'll notice once I kind of start to go through it a little bit, the language is very simple. I want to avoid that corporate jargon because it makes it very difficult for new traders to come in and really grasp onto it. So there's two very big levers that we pull on, and one of them is keeping things very simple, and the other one is keeping things very clean and nice to actually like look at and to experience.
Yeah, no, I really like that. That's one of the things that I really thought was impressive about it, is kind of not that it's a simple thing, but the simplicity of the visual of it, right? It gives the accessibility to everyone to be able to read that and kind of, like you said, give you kind of a bias for the day, which is, generally the first thing that we want to decide when trading is like, which way are we going to go, especially in the futures market when it's long or short. There's really not much else to it, right? So being able to get a simple visual of where that might go is important to beginning traders and even traders that have been around for a long time, I think.
For sure.
Yeah.
It's sorry, go ahead.
No. Yeah. I would love to, let's show it off a little bit here. So can you want to show us a little bit what Edgeful is?
For sure.
Obviously you've kind of covered a lot of that, but let's give the people some examples here. I think that'd be cool.
Absolutely. And so on the right, so obviously I have NinjaTrader up here to the left. Edgeful is going to be on the right here. What I want to do is I want to walk everyone through how everything is laid out first, just so you get a good understanding of where to look for certain things. So starting up top, we have the toolbox and we have the what's in play. The what's in play up here is currently in beta, but this section is going to tell you when specific reports are actually setting up. So for example, there is a gap up today on ES. Here is your target. This is the current price. Here is your target. This is the gap size. All of these different things. So we have it for the gap fill, we have it for the orb, all these different things. I'm not going to touch on this specifically because there are going to be major upgrades coming out, but the what's in place section will tell you when certain reports are setting up. That's the key. So I'm in the toolbox right now. This is like the core of Edgeful. This is like what, if anyone has seen Edgeful before, this is probably what they've seen. And up top right here, this is the nav bar. This is your steering wheel. This is how you do literally everything on the site. So we have, just starting from left to right, we have the markets. So we have stocks, we have Forex, we have crypto, and we have futures. So regardless if you trade options or whatever else, we have something for you here. Then the report type is next. So these are we have three report types for price action, volume, and indicators. So we also have them grouped out for scalper, day trader, and swing trader. So if you know that you're a scalper, you just go straight to the scalper section. It's going to show you all the reports for scalping. Then we're in the price action report type right now, right over here. And then you can see when I click on this, you're going to see all of our reports. They're also broken out by different kind of groups. So we have market open and close strategies. We have chart patterns. We have performance tracking. I'm going to touch on the more popular ones, the ones that our traders have found the most success with. Then all the tickers, we have every single ticker. We have lean hog, we have copper, we have whatever you want to trade, we have it. If we don't have it, you just send us a message on support, we get it added in there.
Great.
Then the sessions. So for futures traders, this is actually really important because this allows you to filter and narrow down all of the reports for specific sessions. So if you trade the London session, for example, you can now filter all of the reports for that London session. You trade New York, same thing. We also allow you to use the daily session and create your own sessions as well. So if you want to, let's say you trade the New York session, but you started at 8 a.m. instead of 9:30, you can just go and create your own session. Then finally up here, the date range. This is going to allow you to kind of choose how far back you want the report to look. So we have up till 5 years. We have these little shortcuts. You can also pick your own start and end times. Does that make sense?
Yeah.
Up here?
Awesome.
Perfect.
Absolutely.
Then going down, so we're in the gap fill report right here. These little bubbles are going to be filters on the report. So we're on the gap fill report. We're on standard. You can see gap fill by size. You can see gap fill by weekday, by time, etc. Then we always have a visual representation of the results. We try to make these as intuitive as possible. We always want that visual representation. We know that people, obviously, for the most part, like to see they're visual learners. So we always have that chart representation. We always have a table representation too. So you can actually see the frequency of what you're looking at. So obviously you bring down that date range to 1 month, the frequency is going to drop. You bring it up to 5 years, frequency is going to increase. Then going down a little bit more, we have chart explainers. So this is actual visual explainer of what a gap is. So a gap up is this, a gap down, gap up filled, etc. Then we have some more details right here, just giving you some information with examples, etc. We currently have a suite of indicators and we're actually building them for NinjaTrader, which will be out probably by the end of January. So we have 30 right now, but we're going to create all of them so you can have them right on your NinjaTrader platform as well. Then some more explainer text, an actual table that breaks down each of the days that make up the results. So right here, you can see 74%, and then you can see every single day that makes up that 74% right down here.
And you can see the price chart too. That's pretty cool.
Yeah, exactly. And you can click and then it will update the price chart. And then finally, the videos. These are super important because they explain exactly what the report is measuring, how you can use it with a live chart example within 5 minutes. This is not a course. These are not 30-minute videos. These are quick explainers on how you can understand what the report is doing so you can take advantage of it when you see kind of odds like this.
Yeah, I love the efficiency of it, right? It's nice and easy right there in front of you. The videos, I'm sure, are very helpful too.
Yeah.
Another quick question for you here. Obviously, I saw the FOMC part of it. I know that's kind of, we had a big FOMC day yesterday.
Yeah, that was crazy.
Very, very top of mind for people. Maybe we could dive into this a little bit as well. I think that obviously it's very relevant. It is very relevant.
It is very relevant. So let's look at this report. This is the FOMC performance report right here. We're looking at ES in the last 3 years. And so the way that we have this report broken out is by all of the initial positive reactions at 2 p.m. Eastern time. So for example, in this case, you can see this is the 15-minute chart. This would be like on a 15-minute chart. If that 2 p.m. candle is positive, we group all those days together, and then the 2 p.m. candle is negative, group all those days together. The reason we do that is because if you just blend them all together, they average out to be 0, which obviously is not very helpful. Yeah. So if you just wait that first 15 minutes, you can see what tends to happen. Now, looking at yesterday, a little bit of an anomaly day, because typically, if that first 15 minutes is negative, which you can see right here, so typically, so we're looking at that negative reaction. If you can see that first 15-minute reaction is negative, typically by the time Powell comes out to speak, that move is going to be reversed. So yesterday was one of the days that was just a complete, 1,000 points on the NQ is insane.
Big day. Yeah.
Yeah. Very big day. But typically, if you go back and you look at all the FOMC days, you're going to see that if that 2 p.m. candle is red, typically you're going to see that move retrace and continuation for the rest of the day. Now, if you look at the positive reactions, typically 2 p.m., it's going to be positive, and then you're going to see continuation in terms of being green for the following hour or so.
Okay.
So,
yeah.
And this is on ES. You can obviously look at NQ. You can look at gold. You can look at oil. You can look at whatever you want. But this specifically is something that I like to use more so for the negative side, I mean, obviously it wouldn't have worked yesterday, but historically it does work. But yeah, more so for the negative side, when I see that initial candle be red, I want to be looking for longs. And one other thing to note is that as a trader, you don't need to be right every single trade. You just need to make sure that your winners are bigger than your losers. So even if you did lose yesterday, which I'm sure a lot of people made money, I'm sure a lot of people lost money. But even if you did lose yesterday, it's just important that you don't let your losses be these massive losses where your winners, it's very difficult for your winners to kind of outpace them. So even if you do take a loss, even if you take an A+ or a high probability setup and it doesn't work, that's okay. For those of you who go ahead, sorry.
Oh yeah, I was just going to say, we talk about risk management here a lot, right?
All the time.
That is an absolutely massive, important deal when trading is being able to cut those out before it does become a situation. But I'll let you continue. Sorry to cut you off there.
No worries. And it just, I like to make it a comparison to sports because a lot of it just clicks with people. But for example, Steph Curry, for those of you who follow basketball, Steph Curry's free throw percentage is very, very high, like north of 90-something%. So if you're going to expect him to make those shots, that's a very high probability setup. Now, if he misses one, does that mean that like Steph Curry's free throw percentage goes out the window? Absolutely not. It means that you take that setup again the following time, like let's say it's a gap fill or an opening range breakout or whatever else, you take that again because it's still a high probability setup. It just didn't work that specific time.
I'm personally going to let Steph Curry pull up again. That's definitely recommended. Yeah, absolutely.
Highly
let him
recommended. Yeah, exactly.
Yeah,
exactly.
Yeah, no, I always love a good sports reference. I'm a big Chicago fan, so everybody, Bulls, obviously we are pretty terrible here, have been for quite some time. Who's your team though?
So it's kind of crazy, but I do like the Celtics and I do like the Heat now.
Okay.
So I was a big Celtics fan.
A little interest. Eastern Conference rivals a little bit, but
I know
that's okay.
Yeah, I grew up liking the Celtics, and now I like the Heat. But I grew up in I loved Paul Pierce, Ray Allen, Rondo, etc. So that was who I loved, and I was not a fan of the Lakers, obviously, but I do respect the team, of course. But
yeah, no, Jimmy Butler is a Chicago boy, so we love Jimmy Butler here. So I have no problem seeing the Heat do that. But yeah, always love a good sports banter. But we'll get back to the trading stuff here. But yeah, let's show us another thing. I mean, open range breakout is another thing I know futures traders are very interested in. I think that's probably a good one to cover. I know that a lot of people out there would like to see that. So maybe, and if you don't mind, maybe let's try NASDAQ, just to give something a little bit different, put a little twist on it.
Okay. So one thing that I'm actually going to note here is let's compare the ES. So now we're looking. So let me just show you what this report does. So for those of you who don't know what an opening range breakout is, it is the high and the low of the first 15 minutes of the market open. So in this case, we're looking at the New York session, which would be from 9:30 to 9:45 Eastern time. So in this case, that would be from, let me just go to a 15-minute chart just for visual references. We're going from 9:30, sorry about that, right there, to right, where is 9? Right here. So the high and the low right here. So in this case, this is the opening range. This is the high and the low of the first 15 minutes right here, these two lines. This report measures how often does price break out just to the top side, which is right here, just to the bottom side, which is right here, and then how often does it break out of both sides. So what you can see here with the ES, obviously, for the most part, very high, 62% of the time, price is going to break out of one side, reverse, and touch the opposite side. So the way that I recommend actually to use this is, let me just switch to the ES quickly, is wait for that first 15-minute, that one side to break that orb, and then take the reversal to the opposite end, because for the most part, price is going to break both sides. So you don't want to expect just continuation down one side when you're trading the ES. Now, comparing this to the NQ, let's look to see the difference here as it loads. Still very high probability, but not as high. So the NQ, you can expect more days where price will just break out of that 15-minute orb and continue in that direction. So understanding the different instruments that you're trading and the personality of those instruments is extremely important, because if you see a stat on NQ and you have this, or let's say on ES, and you have this idea that ES and NQ are the same, they move the same. Now you're going to trade that on NQ, it's not going to work as often because NQ tends to have more continuation. Does that make sense?
Absolutely, yeah. I mean, and again, like you said, 60%, 56%, nobody's ever shooting 100%, right?
Yeah,
So
for sure.
being able to find these opportunities where, you know, historical data is kind of in your favor is an opportunity for you to take advantage of that, and find those commonalities in certain markets and certain time frames. So I think that's important to note as well. And this is like the last 6 months too, so we can even look farther out than that.
I actually have so I have two things about that. One other thing that I want to mention just about this specific report and about most of our reports, we have it by weekday. So if you click on this by weekday, you can see how different weekdays behave. So for example, NQ on Mondays, 70% of the time you're going to get a double break. Tuesdays, only 46% of the time. And now you can go through and you can see, okay, do certain weekdays behave in certain ways?
Right.
One thing that people typically overlook or just aren't aware of because they're not getting this data is that just because you're trading the same instrument every single day does not mean it will behave the same every single day.
Right.
It will behave differently based on certain weekdays. Some days have higher volume, some days have higher range, some days have smaller volume. And if you're a trend trader or you're a breakout trader, you're not going to have really that great success on a day with low volume and low range. But if certain days have higher volume, higher range, you're going to have a lot more success on those days. So you can either size up on those days or you can set your profit targets further out. And we do actually have a report for this, which I'll touch on in 1 second after I touch on this date that you had mentioned.
Yeah.
So we get comments a lot about how does this work over 10 years? How does this work over 20 years? I want to go further back. 5 years is not enough. My answer to that, and the reason that we have 5 years max, is that we're traders. This is not a platform for investors. We are trying to capitalize on intraday moves or multiple day moves. And the market doesn't move the same way now as it did in 2004 or in 2014. So if you're going to use that big of a sample, going back 20 years or 10 years, 95% of that sample size is going to have irrelevant data by being in old market environments. Right now, even since the election, the market has clearly shifted.
Yep.
So if you want to go back 5 years, you're talking about pre-COVID, you're talking about the bull run for 2 years, you're talking about the bear year that we had, and then now again, the market has shifted so many times that if you want to look that far back as a trader, you're going to be diluting the relevant information that you actually need to capitalize on today's market.
Yeah.
So what I recommend is to always look at the 1 year, compare it to the 6 month, and compare it to the 3 month to see how they're doing. Are they aligning or are they different? Does that make sense?
Yeah, absolutely. Time period is completely relevant, right? Like what kind of situation we're in. Economies change very clearly.
For sure.
So it's important to kind of, weight the more recent data versus, 10, 15, 20 years ago. I completely agree.
Absolutely.
We got a couple of minutes here. If you wanted to talk about the weekday, I think it was.
Yes. What I wanted to talk about was the volume and range by weekday. This is a report. It is in the volume report type, just to give you guys kind of a different view. So I was just in the price action report type. Now I'm in the volume report type. And we're looking at ES and we're looking at the New York session in the last 6 months. So now there is a clear uptrend here as you go throughout the week. So what this measures is the average volume, which is the blue bars, and the average range, which is this white line, as you go throughout the week. And there's clearly an uptrend in volume and range. I mean, it does peak out at Wednesday, but what you can see here is Monday, Tuesday have very clearly the lowest volume and the lowest range. And the volume, if you look at the actual numbers here, the average volume on ES is actually significantly lower than a Thursday or a Friday. So Thursday, Friday, roughly 1.2 million. Monday, Tuesday is 950 to 990,000. So a very significant difference, like a percentage difference of volume is very significant. So
Absolutely.
if you're trading on a Monday, you need to account for that. And maybe you want to use lower size. You don't want to stretch out your profit targets as much because you should not expect these moves to be bigger. So typically, just to summarize, Monday, Tuesday, we'll typically have choppier price action. Wednesday, Thursday, Friday, we'll have more continuation just so you can kind of adjust your trading style, adjust your trades for that.
Yeah. I mean, this is really cool stuff. I think this is going to be very beneficial for a lot of the viewers out there. And I would really encourage everyone out there to go check out what Andre and his team have built here at Edgeful, because as you can see from this quick segment, how cool this data is and how, easily digestible it is. So I really, really appreciate you coming on here.
Of course.
And talking about us. Can you just give us a quick, where can everybody find you, Twitter, website, all that kind of stuff?
Yeah, of course. So what I will do is I'll pull up edgeful.com. That is the website, edgeful.com. You can see that right here. And Twitter is just at Edgeful. Our Instagram and other platforms is at Get Edgeful, but our main platform is Twitter. It's just at Edgeful. I highly recommend you follow our stuff. We also post a lot of how to use these reports, how to use them in video form. We have other people do it as well. How do they apply it in their trading? So Twitter is definitely the best resource, also our YouTube, but I highly recommend just start with our Twitter, and edgeful.com is the website. We also have a 7-day free trial, completely risk-free. If you guys want to check it out, play around. It's going away soon, by the way.
Yeah. Check out that 7-day free trial before it goes away. But Andre, thanks so much for being here. We're out of time, but we'll love to have you back, and we'll dive some more into the platform.
Absolutely. Awesome. Thank you.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.